Right now, 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 right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the drop on Bitcoin that has taken place over the last 24 hours. As you will know, there has been a major conflict erupt in the Middle East, one of, if not the largest wars that we have seen in the Middle East in the last 70 years. It is possible that this is going to end up becoming a conflagration even larger than the Iraq War, although that is yet to be determined. There have been thousands of sorties carried out, and a massive impact on the global economy is mounting. Originally, when we saw the U.S. stock market open yesterday for the first time since the beginning of the conflict, Bitcoin shot up because the anticipation was that the conflict in Iran was not going to absolutely crash the stock market. Well, this is an effect that is taking its time, but as you can see, the U.S. S&P 500 just seconds ago actually opened at a very large drop. We opened gapped lower about 2%, a 2% gap down on the S&P 500 open. The reason that this is so significant, and we're seeing the exact same thing taking place right here with the DJI, the reason that this is so significant is because overnight we have seen Brent crude oil futures absolutely explode. We're going to be breaking down why Brent crude oil and the spot price of a crude oil barrel is having such a major impact on the global economy today. We're going to be taking a look at the map of the local region and diving into the geopolitical realities on the ground, and we will understand by the end of this why this conflict is having such a major impact on global markets and what impacts those impacts will have on the Bitcoin and cryptocurrency market. If you're new here, my name is Jeb McAfee. I've been working in the Bitcoin and cryptocurrency space for almost a decade, and it is my dream to help you achieve something that we call financial sovereignty. That is the state of having absolute, supreme, complete, and total control over your finances so that you have peace, and hopefully you can go on to build an awesome life and give to people that you care about. That's what we're going to work on today. Very excited to be here. If you are new here, make sure to hit that like button and subscribe to the channel. We upload 5 days a week here on the channel. Also, make sure to follow us at CryptoJeb, where we will be sharing all kinds of updates about the Iranian war, about how to become financially sovereign, about technical analysis on the Bitcoin charts, and much, much more. Let's get started. Okay, I'd like to start today over on Google Maps because we have to break this down geopolitically. Now, I know we're going to have a little bit of whining and moaning. Oh my gosh, Jeb, geopolitics, ugh. I don't want to hear about it. The only way that you're going to understand what's going on in the U.S. stock market, what's going on in the Bitcoin market, is by first understanding what's going on in the oil market. So actually, I forgot. Let's read some chat, and then we're going to jump right on into that. We've got Queen Finsov in chat. Good to see you, Queen. How are you doing? Philly Skills 1428 is in chat. Christopher Ryan said, it is a good day to be financially sovereign. Absolutely. He also said we are near the bottom. David Bradbury said, good morning. Where is Bitcoin going this month? You came to the right place. That's what we'll be discussing today. Christopher Ryan said, support Jeb. Hit the likes. He's the most consistent in his analysis. Thank you so much. I appreciate that. Queen Finsov said, Bedrock present. David Romero is in chat. We hit the hornet's nest. Our embassies are being targeted. Correct. We will talk about that. And then we have fish equal plants in chat. Good to see you. Welcome. All right. Let's get started. Now, this map explains why this chart go up. Sure, I can make that much more complicated. Okay, so what is this chart? This is, give or take, the spot price of a barrel of crude oil. Now, a barrel of crude oil is one of the most important commodities in the world because, like it or not, I drive a Tesla, right? But I don't misunderstand the importance of crude oil. Like it or not, crude oil runs the world. A massive plurality of energy production the world over comes from crude oil. When you lump in liquefied natural gas into that equation, you are getting close to looking at a majority of global energy exports coming in the form of liquefied natural gas and crude oil. And I've got a couple of statistics here for you. This region, this small region of the world, you've got the whole world, right? You got the whole planet. But this small region of the world right here in the Middle East accounts for up to 33% of global energy exports. Global energy exports include liquefied natural gas, coal, and oil. The vast majority of what you're finding in this region is oil and liquefied natural gas. Now, some of the exports from Saudi Arabia, Kuwait, Iraq, Iran, the United Arab Emirates, etc., some of it can actually be piped across the desert here in Saudi Arabia and be exported to markets over here in the Red Sea. But the vast majority of the oil exports that come out of this region are exported through the Persian Gulf, into the Persian Gulf, through the Strait of Hormuz, out the Gulf of Oman, out here into the Arabian Sea, and then out to global markets, either through the Suez, up here to Europe. But actually, the vast majority of oil exports coming out of the Middle East are going over towards the South China Sea area. They're going towards China, India, Vietnam, Thailand, Malaysia, the Philippines, Indonesia, etc. China is a very large importer of specifically Iranian oil. They were also a very large importer specifically of Venezuelan oil. And so the attacks on Venezuela, the not exactly decapitation strike because he wasn't killed, he was kidnapped, the regime change in Venezuela that we're seeing right now means that China is losing Venezuelan oil. What we're seeing going on in Iran right now means that the entire world is losing basically Middle Eastern oil. There's about 20 million barrels a day worth of oil exports that are generated in this region, dumped into the Persian Gulf on oil tankers, shipped out of the Strait of Hormuz and out to global markets. Every single one of those cargo ships is now no longer able to traverse the Persian Gulf and the Strait of Hormuz for one very specific reason. There are about a half dozen to a dozen insurance companies that insure that provide maritime insurance for shipping companies. Basically, every single one of them has suspended their insurance policies inside of the Persian Gulf and inside of the Strait of Hormuz, which means it is now illegal under international law to ship in and out of the Persian Gulf. That means that all of the oil production in Iraq, Iran, Saudi Arabia, Kuwait, the UAE, Bahrain, Qatar, etc., is not destroyed, but it has come offline. The reason that this is so important is because you're dealing with elastic supply in an inelastic market. If you reduce global oil exports by 20%, that does not in any manner reduce global imports of oil by 20%. The world still demands 100% of the oil that it was demanding 4 days ago before the beginning of this war. And considering oil exports more or less just went offline, that's going to have a huge knock-on effect on the global economy, and it's not something that's going to happen right now, and it's also not something that is going to be fully felt for weeks. Part of the reason it's not going to be fully felt for weeks is because when you actually load liquefied natural gas or crude oil onto a onto a tanker in the Persian Gulf, it can take a few weeks to reach market. By the time it's actually getting to a power plant or some kind of facility that's using it and breaking it down into its subcomponents to create petroleum and different kinds of products, it can take weeks or months for the crude to flow through the supply chain. So the impact that this war is having, even if it stopped today, the impact that even 3 days of shut down exports are going to have on the global economy cannot be overstated. And this is the exact reason why you are seeing Brent crude oil skyrocket. And this is also the exact same reason why you saw the DJI gap down, because crude oil just went offline. A fifth of global production is now offline. This is going to lead to a major impact on the global on the global stock market, just not just the U.S. stock market, the global stock market. So now what we need to be paying attention to is whether or not this ascending triangle pattern that we've been watching on the SPY is going to continue its breakout. Because if it does, there is a very real possibility that what we're going to see happen here is that Bitcoin is going to begin, that the SPY is going to begin moving back down towards its longer-term moving averages. It's been a very long time since Bitcoin has moved down towards longer-term moving averages. The last time we saw it was during the tariff scare of 25, and before that, it was immediately following the outbreak of war in the Ukraine. So the last two times that we have seen the United States S&P 500 drop down to its longer-term moving averages were because of a geopolitical scare and a geopolitical reality. That is the method of correction in the stock market over the last, give or take, 10 years. The last major correction down to long-term moving averages was the COVID-19 pandemic crash. So you see my point. In the last 7 years, the three major times that the S&P 500 and the DJI have dropped down to their long-term averages has been during a geopolitical nightmare. Tariffs, war in Ukraine, and then we also have the COVID-19 pandemic. So the stage is set for a major capitulation in U.S. stocks and for them to go through a correction. And this is something that has honestly probably been needed anyway, because we see that a great many of the stocks in the S&P 500 are trading at PE ratios that are absolutely astronomical. They're just completely ridiculous. It doesn't make much sense at all for them to be there. We need to understand two things. One, for global markets, it is, and I want to be delicate in how I express this because this is a very touchy situation, but for the global stock market, it is in a sense bullish that the attack has been so swift and vicious that it's probably not going to have to last that long, which means theoretically we may only see a few weeks of economic disruption if this conflict only lasts 2 to 4 weeks. However, the fact that it's happening at all is terrifying for markets, and a very large correction could come from this simply because people don't know what's going to happen. There's a great deal of fear involved, right? And we also have these three lower highs that are forming here on the daily chart on the SPY. Here's a couple of the fears that people are worried about. One, people are concerned about Russia or China joining the war. Are they going to? No, they're not going to. Russia's almost certainly no. China is like a 5% they join the war. They almost certainly won't. China's not going to implode over Iran. They're just not going to do it. They need Iran desperately, but it's not worth it to them. If Iran does go through regime change, they can still import oil from the other Gulf countries. So China is actually more so positioned to be concerned about peace in the region than who's there. They would like Iran to continue to function as the country that it currently does because it's one of their allies in the region. However, Iran has not been one of the largest exporters in the region. Iran only exports about 1.5 million barrels of oil a day. They don't actually have anywhere near the amount of oil export capacity as many of the other Persian Gulf nations. So what China is ultimately concerned about is cheap crude, more so than their partnership with Iran. And so for that reason, what they actually really want is peace. And if peace means Iran's regime being gone, then that's what peace means to China. Now, another piece of fear, uncertainty, and doubt that people are concerned about is the idea of what if China makes a move on Taiwan. There has been a grave concern of China moving on this tiny little island called Taiwan. Now, I'm going to try and make this brief, but I want to explain this also. This body of water right down here is called the South China Sea. This is one of the most important waterways on planet Earth. This waterway contains so much shipping traffic, it makes the Persian Gulf look like a kiddie pool in your backyard. This is one of the most significant shipping lanes on the planet because all of the cargo ships come right here into Shenzhen, and they go up this little river right here. I forgot the name of the river, but it's this river. It's the Zhujiang, up this river, up here to all of these different cities. All of these different cities have made all the crap that you have sitting on your desk. This is one of the largest, basically, factory provinces in the entire world. And many of these factories use chips that were created on Taiwan. Taiwan is where TSMC is located. They are the preeminent manufacturer of highly sophisticated chips. This island is the most important island in the world for modern computing, for GPU creation. The GPUs aren't necessarily made here, but the chips that are used in them are, and for artificial intelligence. The modern economy is completely and totally beholden to this island. China wants to make a move on Taiwan because they consider Taiwan to be a part of their sovereign territory. There was a civil war in China just around the time of the Second World War, And the People's Republic of China, which is currently modern-day China, was the communist revolution, and they kicked the democratic capitalists, if you will, out, and they fled to Taiwan. And so now we have this two-China system. So China, this China, wants to invade China, this China. And so there's been a great concern about China invading Taiwan at some point in the late 2020s. As China's power is peaking for demographic reasons. That's probably not going to take place, though. And the reason that that's probably not going to take place, even with the United States Navy being distracted in Iran, is because even without the United States' help, taking Taiwan would be an absolutely Herculean effort, and the United States would most likely join in that conflict. So the fear, uncertainty, and doubt about is China going to take Taiwan, try and invade Taipei, is that going to take place? I don't think it's going to happen, but markets think it's going to happen. And so what's going on right now is you're seeing markets price in the fear of Russia and China joining the conflict in Iran. They're pricing in China moving on Taiwan. They're pricing in all of these fears of crude oil going to $100 a barrel or $120 a barrel because of, again, we have that static demand. We have a consistent demand for oil globally, and we have an inelastic and we have elastic supply right now. In other words, we had a great deal of supply. Much of that has come offline. And so these economic realities are going to lead to inflation. They're going to lead to fear of global markets, and they're going to lead to flights to capital. And so this is why you're seeing things like the crude oil market move to the upside very aggressively. This is why you're seeing the stock market move to the downside relatively aggressively. It's also a big part of the reason why you're seeing all this volatility in gold. Originally, we saw a major rally in gold as a result of this offensive. Now, after a couple of days have passed, the price of gold has dropped by 7%. So the overall economic impacts of this conflict are yet to be fully understood as we are still in the opening days of this conflict. But as it becomes more and more apparent that this is not a conflict that is going to end as a special operation over the next couple of days, but is likely going to drag out to being at least weeks long, if not longer, what we can ascertain is that this conflict in the Middle East has become the single most important geopolitical reality that is shaping our economy today. And it also shows us that there is a great deal of fear, uncertainty, and doubt. And if that does lead to a crash in the U.S. stock market, that will almost certainly, with a 90+% confidence, lead to a major crash in Bitcoin. And that is where we reach our ultimate conclusion for today's piece of content. And that is that the conflict in Iran, although devastating for the Iranians, is also extremely destabilizing for global markets. And so if we are not able to see some form of stability come into the region quickly, if we continue to see energy exports effectively halted in the way that they are currently being, if we start to see energy infrastructure destroyed, luckily so far we haven't seen much energy infrastructure, pipelines, refineries, oil fields, etc. We haven't actually seen much of it destroyed, but if we start to see that destroyed, that's where things get very dicey very quickly. Iran has the capabilities to target Gulf country oil fields. The Americans and the Israelis obviously have the capabilities to target oil fields in Iran. If those oil fields become a target of this conflict, those oil fields, and especially those pipelines, can take years to decades to reproduce, to recreate, because you have to drill new oil derricks. If that takes place, we could be seeing oil manufacturing, oil production taken offline, not just for days or weeks, but possibly for years. And so if this drags out into a prolonged conflict and Iran is not fully defanged to the point where shipping is able to resume in the Persian Gulf, this is going to most likely have a massive impact on the global economy. So again, we kind of have to sit on our hands, wait and see. But right now, it is a little bit discouraging for the bulls that the DJI and the S&P 500 are gapping down the way that they are. As you can see, this gap down right here is something that we need to pay very close attention to. The DJI gaps down. In this first hourly candlestick, DJI drops 1%. I'm sorry, not in the first hour. In the first minute, the Dow Jones Industrial Average is evaporating, down 2.34%. In Bitcoin, we're like, oh, 2.34%, that's not that big a deal. The United States stock market being down 2.34% means about $2 trillion, about $1.5 trillion of market capitalization gone, just like that. Same thing with the S&P 500. Massive gap down. Negative 2% in a day. this is almost certainly, if things continue the way they're going, the beginning of a bear market in U.S. stocks. This is a big part of the reason also why I have held so much cash. I have reinvested some into various different stocks and various different assets. I bought some Chippy, I bought some SPY, I bought some FXAIX, right? The Fidelity 500 Index Fund. I have obviously Bitcoin. I have SPYI, right? I have QQQI. I have QQQ. I have all these different assets. Every single one of them, literally every single one of the ones I just showed, you can go back and put that on slow mode. Every single one of them has a rounded top that looks like it's about to fall over. I am sitting on my freaking hands in cash for a little while because if Bitcoin and the stock market goes through a dump, I am going to be on the one hand praying for the conflict to end as soon as possible, and on the other hand, I'm going to be buying the dip. Because it is my job, as I have always told you, and as I will always continue to tell you, as the man of the house, as the provider of our family, as the leader of our company, to protect the financial interests of our family and of our company. It is my job to act as a good fiduciary, to act in the good interest of the people that I'm responsible for. And the way that I boil that down is it is my job to protect, preserve, and if possible, grow the investment capital of our family. And so if we see the United States stock market drop 20 to 30%, if you see QQQ drop down here to longer term averages, down 30%. If you see SPY come down here and drop 25% down to long term averages, first of all, remember, this is all-time high from 2022. Right? There's a great deal of support down here at 490. But if you start to see 490 show up on SPY, if you see DJI come down here to probably about 38,000, right? About 37,000. If you see DJI come down here towards 37,000, right in there, you're going to get a great buying opportunity. So as I've always told you, and it's for moments like this, it's not fun holding cash. It's not. And that's why for a long time I didn't hold any cash at all. I held almost no cash. I held a couple $1,000s in emergency fund. I'd way more than that invested. If I needed cash, I'd just do something. I'd come up with it somehow. The reason that I don't do that anymore is because the markets crash. That's what they do. They fall through the frickin' floor sometimes, but they always recover. They always recover. If the U.S. stock market genuinely never recovers, that is almost certainly because Jesus came back and everything's in ashes. Okay, so stock market will recover. If it crashes, it'll recover. You needn't worry about that. But what we do need to do is we need to take advantage of the dip. If you see DJI down 20%, that is a generational investment opportunity. If you see Bitcoin down even more than it already is, that's a generational investment opportunity. Bitcoin is already down dramatically, down 8%. If Bitcoin starts dropping dramatically as well because of the stock market crash, then we are going to we're just going to absolutely enjoy buying the dip. So here's what I'm doing. Until we know what is going on with the war in Iran, I am putting a total pause, a total freeze on all investments. Our dollar cost averaging is on pause. Our lump sum investment is on pause. All of it's on pause. Because if there was ever an opportunity for us to find a discount, it would be right now. The world is experiencing some of the most uncertain times ahead that we have seen in a very long time. I don't believe that you're going to see a nuclear war. I don't think that's going to take place. I don't think that you're going to see a nuclear weapon involved. I don't think that's going to take place. I don't think that you're going to see China invade Taiwan. I don't think that's going to take place. What I do think is going to take place is that the uncertainty and the disruption to global energy markets will be even more significant than the disruption that came to markets following the war in Ukraine. If this conflict drags on for more than a few weeks, and if we see more than a few weeks of oil export disruption, this is going to have an enormous impact on markets. And so we must be very careful to have cash to buy the dip. And so if you have income, which I hope you do, I would encourage you to position yourself in such a way where you are prepared to buy the dip. Because the last time that we saw a conflict like this was the war in Ukraine. And I would argue, although that war has seen substantially more bloodshed than what's taken place in Iran so far, was probably less impactful on the global economy, as it did not directly impact the foundation of global civilization, which is energy production. But it still caused a massive crash. If we see this thing drag out, there's no reason to believe that we're not going to see the DJI and the SPY, and then in turn, Bitcoin drop down towards longer-term averages. I mean, just take a look at this weekly chart on the DJI. Tell me that doesn't look like the beginning of something that's going to, move down towards the baseline. It's what it looks like. We can do the technical analysis on it all you want, but the bottom line is, does it pass the sniff test? Yeah, it smells like crap is what it looks like. It's awful. This looks terrible. We've been trading sideways, treading water up here ever since the prospect of the war in Iran kind of heated up. And so now, as we can see, we see the S&P 500 gap below all of the support structure. It's below it right now, 672. So a drop is likely to come. So just keep that in mind. Be ready to buy the dip. Don't panic. Bitcoin always comes back. Stock market always comes back. Dips are buying opportunities. Remember what the great Charlie Munger once said: buy great assets at good prices. That's how you build wealth. That's the basis of what we call value-based investing. When you buy an asset on a significant discount, what you're doing is you're basically buying the asset and an insurance policy. Well, it can't go to zero. I mean, if you're buying a great asset, it's not going to zero, right? Or it's not a great asset. So are you buying a great asset or not? A great asset should have basically zero chance of going to zero. When you buy it on a discount, you are more or less buying the asset and you're taking out an insurance policy about it's not going to go much. It's not going to go. I'm not going to lose as much here as I would have if I had bought it at all-time high. All right. Bartizan said, Jeb, you got to look back on your stream and listen. Absolutely. Let's see. I am dealing with some issues here that I'm not too happy about. You'll have to give me just a second. It looks like we're having some technical difficulties here. Where'd I go? There we are. Sorry about that. When will the free trading course be available for those following the FEMEX steps? Yes, that is available. So shoot an email to malachipats@cryptojeb.com. That is all done. I will put his email in chat. That's all been done. Yeah. There you go. Put his email in all caps. The massive dump coming will be worse. There's a very real possibility of that. Who is this nerd? What's up? Please throw some light on silver and gold also. Well, the hard thing about silver and gold, let's talk about that. The hard thing about silver and gold is that everybody thinks, silver and gold. Silver and gold. Silver and gold are our hedge against global instability. The issue with that is that silver and gold are, like any other asset, prone to correct to their longer-term moving averages. It's just the way it is. You can argue about it all you want, but the bottom line is gold has always moved back down to its longer-term moving averages. We saw the same thing take place here in 2022. Went on a major rally up to $2,000 an ounce, dropped back down to $1,700, $1,600. Gold is doing the same thing right now. It's moonshot here up to $5,500 an ounce. It will eventually drop back down to its longer-term moving averages. But at this point in time, honestly, that could be like $3,500 an ounce. It could be $4,000 an ounce. It's going to go through its correction. Regardless of what's going on geopolitically, you have to realize the fact that that the gold market is using the 70 range on the weekly RSI as support right now. It can't keep this up forever. It's going to have a crash. Right? The only way that a market can keep this up forever and stay up here is if the underlying currency went to zero. But that's not what's happening. The US dollar is having basically a consistent 6% per year march towards zero asymptotically. This massive rally of like 200% in 2 years, 230% in 2 or 3 years, is not driven primarily by the debasement of the denominator. It's driven by the expansion of the numerator, which is the gold market. And that can only go on for so long. And the same thing is true for silver, especially considering silver is basically, number two to gold. It just can't keep it up forever. Silver here was following a parabola, and it is now using that parabolic uptrend as resistance. As you can see right here. Parabolic growth curve with this massive crash and capitulation. We see these two lower highs. Silver is coming back down towards its 8-hourly chart longer-term moving averages. Soon it'll be coming back down towards its daily chart moving averages and even its weekly chart moving averages. The weekly chart 200W SMA is at $31. So all the metal bugs are seemingly about to get a taste of what it's like to be in crypto. Buying something on a generational run that happens once or twice in your lifetime. We have to remember what silver's long-term chart looks like. Silver just broke its 1980 all-time high at $47 an ounce. So this is why we act as value-based investors. It's, DCA, DCA, DCA. Sure, have a little DCA running in the background. But what you also need to do is you also, for the sake of protecting you and your family, you need to buy the dips. If you bought silver down here in this region when it was at $5 versus buying it at 50, yeah, you would have had a great return if you had bought in 93 up until now. That's an 18x. Heck yes. I remember when I was a kid, my uncle was buying silver hand over foot at $18 an ounce. And now it's up 380%. Good for him. But he bought it down here, and I don't know if he knew this, but he bought it down here on the longer-term moving averages. On the monthly chart moving averages, no less. Silver is a market that moves in decades-long cycles. I mean, you talk about Bitcoin having 4-year cycles being long. Silver moves once every 20 years. Moved in the early 2000s, moved in the late 1970s, and it's moving now. It's about every 20 years. I just had a conversation with a 16-year-old guy at church. He was talking about investing into gold and silver. I said, that's a great idea. Just please understand that if you're buying right now, you might be buying at a 20-year all-time high, and you might have to wait until you're 40 to see a return on that. And I explained to him the idea of value-based investing, buying great assets at good prices. There's no doubt that gold and silver are great assets. These are not good prices, though. Bitcoin is a great asset, and it's at a good price. You don't want to watch the wind so much that you never sow, right? So you don't want to try so hard to get the perfect entry that you never buy. A buy at $66,000 on Bitcoin is phenomenal. But with what's going on right now with this war in Iran, I have acquired down here. It's not like I'm watching the wind and not sowing. I have acquired down here, but I'm interested in waiting because I think we're going to go lower. All right, let's go Bitcoin Army. Bitcoin to 105K soon. It's probably going to take a little while. It's probably going to take a little while with this conflict happening in the Middle East. I mean, there is no doubt about it. This weekly chart on the DJI looks atrocious. And so we'll have to see how this plays out. Let's also take a look over here at stocks. We're gonna look at your stocks. The iShares Semiconductor Sector Index Fund. This is one to watch also. It's extremely volatile. Make a ton of money over here if you're careful. From the bottom to the top, it rallied 150% in a year. This Semiconductor Index Fund by iShares. This is by BlackRock. This is a great fund to be paying attention to. This is a fund that moves very similar to one of the income-producing funds that I invest in called Chippy. It is the only yield max fund I would ever buy, but it is one that I'm interested in right now. Now, obviously, it's taking a bit of a dive right now, but it more or less follows stocks. And on stocks, as we talked about, it generally, as we've said, moves back down to its longer-term moving averages, moves back down to its base. And when it does, its 200 and its 300 moving average, this presents an excellent opportunity to buy. A lot of people want to get caught up on trading. Trade this, trade that, trade this, trade that. If you could make 150% every 2 years by simply buying great funds when they're at their long-term moving averages, and all you had to do was have the discipline to stay in cash when the market's rocketing towards all-time high, you would make a freaking killing. And what you end up doing is that if you bought, let's say you did this. Let's say you bought here and you ran up here. And then the market dropped and you bought here. And then you ran up here. If you bought here, this investment back here is still in profit. But you had to have the discipline to wait a few years, right? This investment is still in profit. And then you buy here. And then we drop back. And you never saw that level again. It was gone. Once you got it, it was gone. And then you buy here. And this is still in profit. Every time the market every time the market drops, it's higher than it was before. So your investments, when you make them at the long-term moving averages, basically after you leave the long-term moving average behind, you never revisit that cost ever again. For example, it is extremely unlikely, unless we go into the event of a massive global global economic crisis, that these lows are going to be taken out on stocks, for example. If we did see stocks drop from 360 down to 180 down here on the 300 moving average, and you buy at 194, and it goes to 500, which it probably will because semiconductors are not slowing down anytime soon, that's a 220% return. And you have an entry price that is very defensible, that you're not ever going to want to let go of because you're like, man, I will most likely, unless the entire global economy collapses, not be negative on that. And that's what we do in Bitcoin too. If you zoom out here and you buy Bitcoin down here, these drops towards the longer term moving averages, the market never comes back to your entry. Ever. If it does, it's only there for a couple of days or weeks. But you have to have the discipline to stack cash when the market's at all-time high, because what you think and what you're tempted to do is you're tempted to say, I'm going to buy up here. Stop. Stack cash up here. Buy down here. It's really that simple. So again, a couple of things to be looking at if we do go into a major crash. SOX, it's by iShares. It's a semiconductor sector index fund. If you're looking at something to have as a very small portion of your portfolio, but if you're trying to build income, I like Chippy. I like SPY-I, which are income producing funds. I like QQQI. These are covered call, high income producing funds that I have that produce income for me. I like building passive income to increase my financial freedom. Obviously, of course, the S&P 500 itself is a phenomenal entry. These are not investment advice. I'm just giving you picks to look at, right? I'm not telling you should buy any of these. I'm just saying that these are picks to look at. Obviously, it's very hard to beat the U.S. stock market, which is the SPY. So have cash and be ready to buy the dip. We're in the dip in Bitcoin, so hopefully you bought some here also. DCA is good. DCA is very good. But if you're able to, it is also good to make sure that you have cash to buy the dips. This is how the most sophisticated investors throughout history have built their wealth, is they basically just wait for a dip. They sit on their hands and they do nothing. They go about their life building their business. They wait for the market to crash, and when it does, they buy the bottom. And then they wait, and then 4 years later, when it happens again, they do it all over again. And then they give themselves 40 years before you know it, they're a billionaire. This is what Warren Buffett and Charlie Munger did with Berkshire Hathaway. You should really study the history of Berkshire Hathaway. For about 60 years, they averaged 19.7% return. About double the U.S. stock market. If you take 19.7% return, I'll show you the math. If you take a 19% return over 60 years, what do you end up doing? $100. No monthly contributions. 60 years. 19.7% CAGR. You compound that puppy monthly, you're left with $12 million. Cut that down in a third, 20 years. You turn $100 into $5,000. That's a 50x. Now let's use some real numbers. Let's say you got a $100,000 portfolio and you contribute $1,500 a month. And you somehow manage to reach the same return that Buffett did. You turn $100,000 and $1,500 a month over 20 years into $10 million. This is how wealth is built. It's not built by saying I have to quadruple my wealth every year. That's how you get wrecked. You're looking at too high of a return. But you maintain a 15 to 20% CAGR, which is ridiculously difficult. With Bitcoin, it's actually a lot easier. All you got to do is play the cycles. Then you can build a lot of wealth very quickly. But very quickly in terms of an investor is 5 to 10 years. When you're trying to build a lot of wealth in 5 to 10 months, you're trying to build $10 million, $20 million in 5 to 10 months, you'd better be launching a software company, because that's about the only way to do it. But if you're willing to have discipline and consistency and follow the laws of money that we teach, then you will be just fine. You needn't worry about a thing. All you have to do is stack cash at the tops, because the crash is coming. Something will cause the market to crash. And when it does, you are there prepared to buy the dip. And when you go to buy the dip, I would highly encourage you to do so on iTrust Capital. If you guys have not already signed up for iTrust Capital, I would highly encourage you to do so. And the reason for that is that iTrust Capital is the premier destination for investing in Bitcoin and cryptocurrencies using traditional and Roth IRAs. Now, an IRA is an incredibly important investment vehicle because it allows you to either defer or simply not pay capital gains taxes, depending on whether you go for a traditional or a Roth IRA. This is extremely important because what you end up seeing happen is that the savings that you would have had, the money that you would have had to spend on taxes, can actually be reinvested into more crypto. So let's say you make $200,000 a year and you invest $7,000 into a traditional IRA. You're able to deduct that $7,000 from your income, which means you're actually only paying taxes on $193,000. So if you're not paying 24% taxes on $7,000 of investment into Bitcoin, then you just saved yourself almost $1,500 in taxes. So you can do whatever you want with that $1,500. You can go and spend it. You can go and gamble it away. You can go out to dinner with it, or you can put it into more Bitcoin, which is what I would do. You can put it into more Bitcoin. So one of the best methods for building generational wealth is to invest through a retirement account. So I highly encourage you, especially if you're planning on not touching your Bitcoin until you're 59 and a half anyway, you might as well buy it in a retirement account and get those free tax savings that Roth IRAs and traditional IRAs afford. If you come down here on the iTrust Capital website, you can see they have the comparison between the exchange and the Roth IRA. If you're buying on exchange, you buy $10,000 of Bitcoin. You sell it for $60,000 in the future. You achieve a $50,000 capital gain on the Bitcoin. At a 15% capital gains tax rate, you would pay $7,500 in capital gains. That's 75% of your cost basis. It's ridiculous. In a Roth IRA, you buy some Bitcoin for $10,000. The value of your Bitcoin appreciates to $60,000. You sell your Bitcoin for a capital gain of $50,000. And because it's a Roth IRA, you have a non-taxable capital gain and you pay $0 in capital gains taxes. It's absolutely incredible. You should make sure to max out your retirement accounts every single year. And one of them should be over here on iTrust Capital, acquiring Bitcoin. Links in the description box down below, or go to itrustcapital.com/go/crypto-jeb and sign up for a free $100 funding bonus. Let's do a little bit of chat. Love to see you guys here. Good morning, sir. I got a buy order. And it's at 63,100. Is it going to hit it? Probably. Probably. I mean, I can't tell you for sure, but probably. Yeah, probably will. Pastor Jeb, absolutely. I am very, very thankful for the role that I get to play here in hopefully blessing you guys. All right. Let's read a little bit more chat here. Let's see. It's a little glitchy. Let's fix that. Sorry, my screen messed up a little bit on my end. All right. Okay, so one of the next things I want to talk about here is actually Bitcoin. So to that end of, are we going to hit 63,100? Well, 63,100 is right about here. Very good positioning, I must say, because you're trying to snag a return to these local bottoms. In all likelihood, that probably will hit. The bounce here off of $60,000 has been nothing short of abysmal. I mean, it's been awful. It's been terrible. The likelihood that Bitcoin is going lower is extremely high, especially considering the conflict in Iran. We did have the breakout that we saw yesterday on Bitcoin that seemed promising, but Bitcoin has now completely erased all of those gains, and Bitcoin did not even manage to really create any higher highs. We rallied up to $70,000, and we soundly rejected. This is a bear flag if ever I have seen one, and it points down towards lower price targets, down sub $60,000. As you guys will recall, right back over here, I said I am no longer acquiring Bitcoin until sub $60,000. Against that, I acquired one more time, but I'm once again in a holding pattern, not buying anything until sub 60,000, because I would like to get some good entries. I would like to see Bitcoin come back down here towards its longer-term moving averages. If everything else is going to come down towards its longer-term moving averages, then there's absolutely no reason why we shouldn't see the same thing happen on Bitcoin. None whatsoever. So our bear market targets, if anything, have been validated by the outbreak and the conflagration of escalation in the Middle East. What's going on between Israel and the United States versus Iran increases the likelihood of Bitcoin dropping down to $50,000 or even below $50,000 dramatically. And so we need to pay very close attention to how the market is going to respond. What I will say is this. I will say that Bitcoin has managed to eat up a lot of that selling pressure, and a lot of accumulation is taking place down here. I want you to understand what this kind of pattern means. Bitcoin dives off a cliff and then starts trading sideways. It does theoretically mean that Bitcoin's probably going to go lower, but what it also means is that there's a lot of convicted buyers down here, which is why the selling stopped. Well, excuse me, the selling didn't stop. That's why the dropping stopped. We stopped dropping because there are a great number of convicted buyers buying in between $63,000 and $70,000, because even though they understand that they'll probably see that investment go lower in the short term, in the long term, they're actually going to be very glad that they took out that investment and held it. And so if you are an investor worth your salt, you should understand that Bitcoin can and probably will go lower, but you also need to understand that $63,000 to $70,000 is still a phenomenal entry. And even if Bitcoin does sweep these lows down here towards what we saw back over here in 2024, even if we do sweep the low down here, down to $50,000, then that does not mean that we should be scared. We should not be scared of a drop down towards those levels. We should, if anything, be taking as much advantage of those drops as possible. Okay. Jeb, you should look into GameStop. Michael Burry says Ryan Cohen is the next Warren Buffett. GameStop is the next Berkshire Hathaway. Insanely undervalued. I mean, it depends. It depends on if they can maintain their conviction around Bitcoin. The Truvio for Life said, good day, sir. Good day to you as well. This bear market might be the biggest, might not be. I don't think it'd be the biggest. I'd be surprised if it was the biggest. The largest bear market in history was 85% deep. I would be exceedingly shocked if Bitcoin dropped to $18,000. That would be wildly surprising. I would not expect that at all. I would not see that coming. I don't think anybody would see that coming or be able to forecast that kind of thing happening. But I do forecast Bitcoin dropping down towards its 300 weekly moving average, which is currently sitting right here around 51,000. And a big part of the reason for that is because, let me show you the overlay here. A big part of the reason for that is because the last time that Bitcoin went into a bear market, a part of the reason it was so deep was because it coincided with a stock bear market. I've overlaid the S&P 500 here, right? You have the SPY specifically overlaid. And as you can see, we went through a major stock decline from about 480 points, our all-time high, down to about 354 points, our low. And when that occurred, we were able to see that Bitcoin correlated with it almost perfectly. And so we're probably going to see a very similar thing take place. If the S&P 500 does enter into a major downtrend, which is highly likely at this point, highly likely, like 70, 80% likely. If that does occur, I mean, we are seeing a bearish break of structure taking place right now. Just a few weeks ago, we talked about how the S&P 500 was in this rising wedge. Then we've also discussed this overside, underside test. Now we see the S&P 500 as of this morning gapping below this flat support here at 676. This does not bode well for the stock market. This, if anything, excuse me, encourages the idea that what we're probably going to see take place is that we're going to see a reversion back towards longer-term moving averages, and that reversion is one that will probably reset a lot of the PE ratios with these companies because they're very overextended. They're very overextended. They're trading in multiples that they probably shouldn't be. Their earnings will continue going up as the stock price goes down. It'll reset the PE ratios back into a decent, probably not a great value, but a decent range. And so if you get entries down here on this 200 moving average, literally all you got to do, come to TradingView, go to your indicators, simple moving average, boom, pull that up, come over here, set it to 200, go on your weekly chart, turn it on everything. That's where you set your limit orders. Seriously. I mean, again, not financial advice, but what I will say is this is what the great Charlie Munger said to do. So, not my financial advice, it's that guy that was worth $3 billion when he died's advice. So if you want to sue somebody, sue him. He's dead. But he did say, if all you ever did was buy the 200 moving average, you would have outperformed almost every single stockbroker in history because the markets move back down towards the 200 weekly moving average, and that's where they bounce. That's where almost every single fund bounces. We live in a simulation, don't we, guys? If you see the market drop back down into this investment band between the 200 and the 300 weekly, that's where you build. That's where you build that position. All right, guys, but if you're interested in trading Bitcoin, I would highly encourage you to check out Toobit. They are our exchange partner, and they currently have $3.5 million worth of rewards up for grabs. They love celebrating birthdays, and as they are turning 3, it is their three-rific birthday showdown. For the next 27 days, you can go head-to-head for a prize pool of $3.5 million, and you can even drive home in a Porsche. We love Toobit, been trading on Toobit for a very long time. It's a fantastic cryptocurrency exchange, and there are all kinds of different trading competitions and missions and day trading challenges and whatnot that you can join in to get access to that prize pool. So if you haven't already, make sure you sign up for Toobit with the link in the description box down below. There's all kinds of different pools over here. 10-gram gold bar, a Nintendo Switch 2, an Osmo Pocket 3, a DJI Mini 5 Pro, iPhone 17 Pro 512 gig, Unitree robot dog. You want the robot dog, you know where to go. You go to Toobit. Am I right? You can also register to win a Porsche Taycan. I love this car. I've ridden in this car. I have a friend of mine he founded a company that we rented space from. I might be mispronouncing the name of that, but I've ridden in one of these. He founded a company. I'm not going to say the company because you'd be able to find it and find information. It's a very large company. They were the IT provider for Saudi Aramco, which was at the time the largest company in the world. He had just sold the company. He sold it for, I'm going to guess, $40 to $50 million. And he was never the kind of guy that bought anything nice for himself, but his wife convinced him to treat himself. So he bought a Porsche Taycan. Is it Taycan or Taycan? I don't recall. I don't really care. But it was a nice car. It was cool. So if you want one of these, I can tell you firsthand. I've ridden in one of these. They're nice. They are nice. Toobit is coming behind you with a competition and is going to give you the ability to possibly win one of these. They're very, very, very nice cars. I got to ride in it for a little while. They're wicked fast. They're silent because they're electric. I believe they're electric. So definitely make sure to check out this competition over on Toobit. Links for that in the description box down below. Guys, we are a little over time here, so we're going to have to wrap it out, but ultimately I want to remind you and encourage you. Sometimes I combine words. You ever do that? You ever combine two words and it sounds really stupid? Like, encourage. I want to encourage you. Remind and encourage. We're just making up new words, right? I mean, I suppose all words are made up eventually, right? I want to remind you and encourage you. I want to remind you and encourage you to make sure that you have cash by the dips. The lower you can buy an asset, the more downside protection that you have. The more downside protection you have, the better the investment it is. If you, on the one hand, identify what's a good asset, and then you, on the second hand, identify what's a good price, then you have found where you should invest. What you should invest in and when you should invest in it. It's interesting because is it a great asset or not? That's your fundamental analysis. Is it a good price or not? That's your technical analysis. If you do your fundamental analysis on the asset and you discover it's a great asset, great. Step one's done. Step two at that point is wait for a good price, which is the hardest part because you got to sit in cash and you think, oh, my cash isn't doing anything. It's just losing money in investments. Stick it in a high yield savings account. Stick it in a money market account. Stick it somewhere that's not going to lose value in the market. Wait for a drop. It might take 2 years for the drop to come. You can dollar cost average. I'm not saying don't dollar cost average, but keep some of it in that cash account. And when that dip comes, that's where you get your investments. I hope you guys have enjoyed today's video. If you did, make sure to hit that like button and subscribe to the channel. Make sure to check out iTrust Capital with the link in the description box down below and Toobit as well. Also, by the way, don't forget to sign up for the Cryptocurrency Technical Analysis Academy if you would like to learn how to do technical analysis on Bitcoin and cryptocurrencies and stocks, etc. I would highly encourage you to check out CT2A because this is where we are going to teach you exactly how to do that. The link is in the description box down below. You're going to get access to over 12 hours of video instruction teaching you exactly how to do just that. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.